It's all part of the purchase price of coming here today. No refunds. So we have this level here that we allow for the wicks to form through it, but we don't want to ever want to see the bodies close above it. We don't want to see that. So that's how I'm internalizing what I'm expecting when price is trading up into the fair value gap. My entry price point is specific. It's not, how do I get in this zone? How do I trade this zone? That's bullshit. We have to know what levels we're trading. Okay. So if it's going to trade in and above the midpoint and it's giving me a real high premium price, what price level am I going to aim for there? The upper quadrant level. Now tell me, how's that for logic? It's not ambiguous. It's not milli vanilli. Okay, you don't know what you're getting. I know exactly what I'm looking for. I know exactly what price I'm aiming for. And I know exactly where my stop loss is going to be at. I'm not guessing. I'm not wondering where I should put it at. I'm not worrying about if it's going to get hit, because if it hits it, then that's wonderful. That I just paid a premium for information. I got new intel. That means I'm probably looking at an inversion fair value gap, and I can mitigate that loss very easily. Oh my goodness. Yes. And you're worried about losing. Why are you worried about losing? Losing just is you paying a premium for more information. You're getting close, you're getting a better view of price, its next move. You're getting VIP seating, but you have to pay extra for that, don't you? That's all this is. When you take a loss, that's what you're getting. You're getting VIP treatment for the next price run. Now, if you get stopped out with retail logic, you're scared. You have no idea what's going on. It's terrifying. You freeze up or you go into panic mode or you go gambler's numb and you just start pushing a button hoping something happens. And at some point, you don't even care if you are making money when you get like that. So to avoid all those things, you have to have a logic in mind how you're going to look for the pattern. If the pattern is the fair value gap for you, which is I'm pushing that on my son. Like I'm almost basically making him only trade with this one. Because everything I'm teaching today, this week, and in this entire 2024 mentorship is a foundation for him. He will have the ability to migrate away from the fair value gap if he doesn't want to use it, if he finds something else better. But visually, as a teaching aid, the fair value gap is good. Okay. The first presentation fair value gap right there. Let's highlight that. Every single time I annotate the chart, I gotta start looking at the time down here, and if it's about to go to in the 50-second before the change of the minute, I gotta wait for that to happen because every single time I annotate the chart, it jumps. And sometimes, if I'm talking too fast, the I won't notice it, and then my chart won't be like it's supposed to be, and it makes me angry later on when I see what my chart looks like. All right, I want to get that mid line off. It's not what I want right here. Okay, so here's first presentation fair value gap. So now we know the prices. We know how we're going to build in pyramided positions. If I'm not saying you should do this, if you're first time trying to learn how to do this, do not try to pyramid, please. Don't try to build big positions. Just try to trade one contract and use the easiest low hanging fruit objective. Entry, that's this one down here on candle number 3. It's high, -1 tick. Okay, you're going to practice with that. You're going to do it with market orders first. So that way you're going to time it. What this does, it helps you with your anticipatory price reading skills. It's better and it's more efficient and professional to use limit orders. I'm not trying to discourage you. In fact, that's where you should be going with this. But it helps you understand how to time the market and how to read it with your marketing in. When you start trading with your real money, should you ever decide to do that, the only time you should be really doing market orders is just to get out of something that you need to protect your money with. Okay, I'm a strong believer that your exits should be on limits and your entries should be on limits, or on rare occasions buying on a stop or selling on a stop, and as an entry mechanism into it. And you see what that was there? It was a stop hunt below that short-term low. The wick went all the way down. Look where the body stopped, above first presented fair value gap. mid gap still is on the table. So low hanging fruit entry pricing for a one contract micro NASDAQ, micro E-mini S&P. You're not trading the mini. So the micro, it's $5 per handle or point for the ES if you're trading that one, or $2 per handle or point for the NASDAQ. A mini is $20 per handle. So there's the difference, okay? When you're learning, Caleb, you're going to be executing on the micro. It's not about the money, it's about the process of simply following the rules and desensitizing yourself. It does not take long for everyone else that's listening. You're all thinking, I want to go into the mini. I need to trade 5 contracts on my funded account. Don't. Don't do that because you're not equipping yourself to trust what it is that you'll eventually live by. It's a very boring process.